Hey guys, and welcome to my top 5 stocks. Just before we get into this, I just want to make it sure we are not financial advisors, and always remember to hit that subscribe button, hit that like button, because it really helps out us in the YouTube algorithm and really helps us out an awful lot. So without further ado, let's get into my top 5 stocks. Right, so let's get straight into my top 5 stocks. As you'll see from a lot of these picks, they're from cybersecurity to gaming to some valuation plays, and you'll see where me and you are different in opinion, but also where we cross over as well. So, without further ado, let's get into my first stock, which is Crowdstrike. So Crowdstrike, if you're familiar with cybersecurity, you will know what this is. Crowdstrike is the leader in endpoint security over the cloud. They use the cloud and artificial intelligence to help stop breaches. So cybersecurity has never been more important in today's society than it is right now. You can see it from even our own country. Our own health service has been hacked. In the US, the oil pipeline has been hacked. And also with the SolarWinds leak, Crowdstrike was one of the companies that helped to clean that up. So they were set up in 2011 by George Kurtz, and George Kurtz left McAfee to set up his own company, and has now brought them to become one of the leaders in cloud security, and this is why they command such a valuation that they have and why they're growing at such a rapid rate. So we're going to get into a bit about the valuation of Crowdstrike. So Crowdstrike is a stock that's ranging in between $180 to $220 at the moment, which is a market cap between 40 to 50 billion. And they had a revenue last year of 874 million at an earnings per share of minus 41 cents. So they're commanding a very high price to sales ratio at the moment, ranging between 40 to 50 at times. And it just shows that this is a really expensive stock, but it commands that valuation for a reason. It's growing at an extremely rapid rate. They're the leaders in their technology. They're making acquisitions left, right, and center, and they're growing their business. So we'll get into what the PE is. So the PE ratio is obviously not available right now because they don't have any earnings on the books. But their forward PE is coming in between 300 to 370, which is extremely expensive considering the general market trades between 20 to 25 or even around 30 these days, but that's generally where it trades. The PEG ratio, which is the growth to earnings ratio, is trading at 15 to 20, which is also very, very expensive. So this stock, you have to be aware of its valuation, but you also have to be aware of the situation that it's in as a market leader in cybersecurity, taking advantage of the cloud and artificial intelligence to really take hold of its business. The debt to assets ratio is around 68%, which is it's on the higher side, but it's pretty manageable considering they're putting a lot of money into R&D, marketing, all that kind of stuff as they grow their business. The growth rate this year is coming in at over 50%. They grew over 80% last year, and I think they're going to beat this altogether, and it's way better than what analysts are giving them. They're going to grow an awful lot more. So don't be surprised if they do beat numbers. So as we get into my second stock, it's Corsair Gaming. Corsair Gaming, gamers out there will know who they are. They're a great brand in the gaming industry. They do PC builds, headsets, monitors, keyboards, mouse, all computer accessories, and now they're also getting into the streaming space as well. So Corsair went public last year, and the stock hasn't moved exponentially in either direction since then. But what is really appealing around Corsair is the valuation that it commands. So Corsair, for me, wasn't too appealing at the beginning of the year. I thought they'd have a slowdown as people had taken the time to buy a lot of the computer equipment over the last year as they've been stuck at home all the time. But now we are also seeing it accelerate into 2021. So it's a great industry. It's in gaming. And where do you think gaming is going to be in 5-10 years time? It's going to be exponentially bigger than where it is right now. That's just something to think about when you're getting into gaming. Like, where is it right now? Is it at the top or is it still growing? It's absolutely still growing. So just think about that as well. But now we're going to get into the valuation of Corsair. So the valuation of Corsair is ranging in between 30 to 35 on the stock range, which is giving it a market cap of 2.8 billion to 3.2 billion. With a revenue of 1.7 billion and an earnings per share of $1.20 last year, this is giving it an extremely low price to sales ratio. The PE ratio is currently trading between 28 to 30, with a forward PE of around 14 to 18. This shows already that this stock has room to run to catch up with the rest of the market, which shows that it's going to increase just on the basis of averages alone. The PEG ratio is between 1.5 to 1.7, which is considerably lower than the likes of Crowdstrike, as we just mentioned, and other ones like Tesla and NEO, them kind of stocks. The debt ratio is 66.72%, which is on the higher side of things again, but they're putting more money into their development, acquisitions, the same kind of thing as CrowdStrike, and they're going to be growing massively over this year and into the future as well. Analysts have them growing at around 20%. I wouldn't be surprised if they do beat that by a long margin. So there's definitely one to consider from a valuation perspective and also from a growth perspective as well. My third stock is another value stock that I've picked, and it's my way of playing the automotive boom around EV without getting directly into Tesla or any of these small startups like Fisker, Hyliion, Workhorse, some of them kind of stocks. So Magna International, they've been in business since 1957. They're an automotive manufacturing company. So they make seating, they make the bodies, they make the windows, they make the mirrors, they make the doors. The list goes on and on and on. They're a contract manufacturer for some of the big brands like BMW, GM, Mercedes, and along with many, many more, including Range Rover. They're also partnering with small startup EV companies, as I mentioned, Fisker, which they're going to be making the full body for Fisker, as these small companies don't have the capacity to build their own factories. They'll contract Magna in, and they can take full advantage of all of these startup companies coming in, trying to make their mark, but they don't have the capacity to do so. They're contracting out their work to Magna. There's also a rumor in circulation that they could possibly be in with the chance of getting the Apple contract when they come to create their own EV car over the next few years. It's a rumor, but it's definitely something to keep in mind. We're going to get into the valuation of Magna. So Magna is ranging at the moment over the last month, 2 months, between $90 and $100, which gives it a market cap of 26 to 32 billion on a revenue in 2020 of 32 billion and an earnings per share of 252. So this company is extremely profitable already. Their price to sales is very low. It looks like a great value stock. And as we get into these ratios, you'll see more of what I mean. So the P ratio at the moment is in between 23 to 26. The forward P is between 9 and 11, which is considerably lower than where the rest of the market is trading at. Their debt to assets is around 60, which is manageable again. Their growth rate for this year is 25%, with a slowdown coming in the year after. But it's just as things reopen, places get back to normal, they're looking for more vehicles. That's why the growth rate is going through the roof for this year. Their earnings report in the first year was exceptional. They blasted out their estimates, so it's definitely one to consider if you're looking to play the EV market from a safety point of view. The fourth stock I'm going to get into is Upwork. So Upwork is a freelance gig economy stock. They've really grown over the last year by rising over 200% in the last year as a stock. This company allows freelancers to publish their skills online on a workplace where they can apply for jobs. They can get sought out by employers for short-term to longer-term contracts. So Upwork has fierce competition from a rival you may know as Fiverr. So Fiverr do very project-based work. So you look for a task, you go to Fiverr. Where Upwork differs, they give you more of a longer term solution to the issue that you're having, and employers will take on employees through Upwork for months, 2 months at a time, where you can build up a proper clientele and really get to know people that you're working with through Upwork. So that's how they differ. Fiverr is growing at a lot of a faster rate than Upwork, which is something to consider, but it also commands an extremely higher valuation. And these two stocks are not cheap as it is. So Upwork is in the range of $37 to $49 and a market cap of 4.6 to 6 billion on a revenue of 373 million in 2020. Their earnings per share was minus $19, minus $0.19, sorry. Their PE ratio is not available at the moment as they're not profitable. Their forward PE is in the range of minus 350 to 400, which shows they're not going to be profitable anytime soon, but I'm sure they're looking at changing that once they've got their customer base and got the growth rates that they want. The PEG ratio is off the charts. It's definitely something that will be off-putting to investors, but I see this stock growing at 30% continuously over the next decade or so. So the growth rate on this is 30% roughly for this year. Don't be surprised if they do beat that, end up growing at 40 plus. The first quarter they grew at over 37% year over year, which was extremely good. So as we get into my last stock of the 5, it's a retail stock. Here you'll see a bit of a crossover with Gino as well as Magna in the automotive area. So Revolve are a retail stock that have really taken by storm really over the last year. They didn't falter over COVID. When people stopped going out, so they stopped going for meals, they stopped going to festivals. And what Revolve has really done over the last few years, they've taken advantage of the influencer community. So they use influencers to spread their brand, spread their influence, and help in their marketing online. So they're really using social media to the best of their advantage. And although they didn't grow during 2020, they managed to come in with a sizable revenue and remains profitable, where a lot of other retailers did not. So that's where they differ. So as we get into the valuation of Revolve is commanding a market cap of between $58 to $41 over the last month. It really shot up after earnings, but with the current market volatility, it kind of came back down. So the range is between 3.2 billion to 4 billion market cap on a revenue of 580 million and an earnings per share of 0.79. So their price to sales is not so off the charts as with the likes of Upwork and Crowdstrike. Their PE ratio is between 50 to 60 at the moment, which is okay. It's more than the average of the market, but it's definitely manageable with a forward PE in the range of 40 to 48. So it just shows that as the forward PE ratio comes down, it shows an improvement in the business, that they're becoming more profitable over time. They have a PEG ratio of between 2.9 to 3.4, which it's higher than the market. They do say over 1 is an expensive stock, but it's different when you're looking at a growth stock over the next 5 years. So their debt to assets is 34.57, which is quite low, and it's the lowest of the bunch that we have here. And their growth rate is over 30% for this year, and it probably will continue for year on year for the next 5 years to 10 years. They're a great company, and they're in a really well situated to take advantage of the reopening of the world economies. Right, so that brings us just to the end of my top 5 stocks. And don't forget to hit that like button because it really does help us out a lot. And don't forget to subscribe. If you do like this content, please keep an eye out over the next few days. We will have a dual video coming out where the two of us will be discussing the weekly topics of information that have come out in the news and things of note that we think are affecting the market. Thank you guys.